Good morning, everybody. It is Monday, April 12th, 2021, about 6:40 a.m. Eastern Time. A little different subject today. Someone had inquired about how this tool set works on Treasury bonds and Treasury notes, so I pulled up the June Xeon contract here to take a look at the Astro Excel, the Vedic timing windows, and also take a look at the pH indicator and see how we do with that. Looking at the Vedic trend from March 26th to the present, you can see the Astro green line was down, marked by the blue trend line in the lower panel. The market was down in that frame. The green line turns sideways. The bond market flattens out, goes into a consolidation mode. The green line continues down into April 4th. The market makes a corrective high and starts trading down. Green line flatlines between the 4th and halfway through the 6th. The market's flat. Green line starts tracking up. Trend in the notes continues upward. We've got really nice tracking going on there for the last 2 weeks or so. Moving to the Vedic window, our primary trend down here in panel B1 is bullish. Our secondary trend in A2, when we come off of the red bearish window, we go neutral, bullish continuation, neutral. So the primary trend in that area right there is bullish. You can see the market tracks up. We make a new high in our white timing window, and then we have a green timing window the next day on the 9th where we make a low. So the timing windows just as effective here as on any other market. They work everywhere. Moving over to the pH indicator, we'll look at a couple of charts, follow through this from last week. You can see here we have an identifier. We're looking at the gray P2 and the yellow to blue switch on the P1 pane. You can see P1, P2 marked in the lower left hand corner. So our identifier at this early morning low is in gray, and where we go to blue. So we're in the blue mode there. I moved the vertical line over a tad so you can see the actual low bar. Here we've got gray blue. Here we've got gray blue. That's 2 consecutive lows off of that trigger. Here we've got gray blue. That's 3 trades in a row. Gave you the low. Here we go gray blue. Got another low into an upswing. And then the last one, the gray blue, it's starting to peter out here. And it's also in a kind of in a quiet market area, so we don't get much of a move there. But not bad. We got 4 good trades in a row off of that pattern. Okay, continuing the week, we've got trades, our method 1 and method 2 on this chart. I'll start with the method 2 trades. You can see the 2 method 2 trades right here. We get a nice high triggering into this short, and then we get a low triggering into this long. At the end of the day, the method 1 trade, we're looking at the yellow in the P2 and the yellow to blue area on the P1. So we've got the overnight or the prior day high marking that out, and then you can see as we get into the evening, we get a low there. We get a high here that triggers that nice move into the overnight low. One more here in this high right here that triggers into this short. What you have, and I've talked about this in other videos, and you'll see this a lot, when you get these M patterns and the signal comes in the low in between 2 highs, you've got to look at this like this is the high, and the market's going to track down after the retest. We see this over and over again, especially in the US indices, but the same thing happens in all markets where you get this, make a high, you start to roll off, you get the retest of the high, and then it breaks. A lot of time our timer will show up right in the middle of the M or W pattern, something you really have to pay attention to. So that's it for today. We just wanted to take a look at a different market. We'll be back again with another video tomorrow. We'll see you then.